Hello and welcome to NYSE Investment. This analysis is for GE Vernova on the New York Stock Exchange as of 7th of August 2026 with a share price of $1,000. The full report is on NYSE.ca. A world-class energy equipment franchise at a demanding price, a hold to own on weakness, not one to chase near 40 times earnings. Business quality scores 78. GE Vernova helps generate roughly a quarter of the world's electricity, and its heavy-duty gas turbines are effectively sold out into 2030 as data center power demand collides with a tight supply of new capacity. That scarce installed base locks in decades of high-margin service revenue. Orders are up 88% year-on-year, and the backlog stands at a record $176 billion. The one clear blemish is wind, which is still losing money with orders down 40%, a segment being pruned rather than defended. It is a genuinely excellent business. The question is entirely the price. Valuation scores 34. Expensive. On the disciplined rate and growth anchor, the shares warrant about 23 times earnings. They actually trade near 40 times, roughly 1¾ times what the model justifies. And the headline is worse than it looks. Reported trailing earnings are flattered by about $7.5 billion of one-off gains, a tax benefit, and a non-operating item. So the reported multiple near 29 times understates how richly the operating business is valued. That is why the signal is capped at hold by the valuation ceiling. The business keeps compounding. The price already assumes it. Timing scores 47. The macro backdrop is firmly supportive. Industrials is one of the best positioned sectors, carried by electrification and grid capex, and the AI power driver scores 75, a clear tailwind. But a tailwind can only lift a buy to a stronger buy. It cannot rescue a hold. On the tape, price sits just below the 20 and 50-day averages after the post-earnings dip. No entry group is met, and the read is wait. Even a 50-day reclaim only gets the stock back to hold, while the valuation stays expensive. There is no entry edge here today. Now, the other side of the ledger. Rich, approximately 40 times multiple, can mean revert hard on a growth wobble. Wind segment keeps losing money, a persistent drag. Reported earnings inflated by approximately $7.5 billion of one-off gains. Bear case approximately $760, about 24% if AI capex cools. Now weigh the risk against the reward. The bull case is roughly 48% above today, the base case, the most likely, about 21%, and the bear case, a fall of about 24%. So you are risking about 24 to make 48. So, our call on GE Vernova on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by NYSE Investment at NYSE.ca. The link to the full report is in the notes below. Have a great day.